FedEx trading to the upside here was up just over 4%, pairing some of those earlier gains now up just about 3% after releasing its first quarter earnings report. Yahoo Finance's Brian Sozzi is here. Brian, I know you were closely tracking FedEx, especially since we got those prelim results last week. What do you make of the cost-cutting announcement? Because that seems to be the big headline here and the reason why shares are moving to the upside.
Shauna, there's a party here at Salesforce's Dreamforce event, but no party for FedEx shareholders. I was on the Yahoo Finance app. I'm surprised to see the shares up close to 3% on this results that came as a pre-announcement. Wasn't this report supposed to come after the bell? Nonetheless, I made a couple notes here. First, you have a management team now committing to $1.5 billion in stock buybacks right into the teeth of a recession. And this fits with everything that we slammed the company with last week when they come out here and whiffed on earnings guidance, withdrew their full year guidance. What is going on at this company? And along those lines, also not coming out here and taking down their fiscal 2025 long-term growth targets. Jared highlighted that still a company looking for double-digit earnings per share growth at a time where they're going to cut billions in dollars of costs that will very likely have an impact on the morale inside of FedEx, which means that will impact their top line even more. And then, oh yeah, all this is coming inside of a time where interest rates are likely to go much higher, as we learned from the Federal Reserve this week, and likely to impact not just US demand, not just US package volume for FedEx, but also everything they're doing overseas. I think the vibe on FedEx on Wall Street remains this. They have reset expectations on Wall Street with this disastrous 2 weeks of news, guidance, you name it, actual performance. I'm looking at FedEx Express operating profits down 69% on the most recent quarter. That's absolutely awful. Bottom line is FedEx is going to need a couple quarters where they come out here, smash earnings estimates by 10 to 20 cents and regain the confidence of investors. And Shauna, Dave, and Rochelle, that is a tall order to do when you're having an economy that might not even be growing later this year and then ultimately into the first quarter of 2023.
Yeah, in particular, Saz, the economy that Rob Subramanian just told us about the other day. The stock is up about 3%, but only to where it opened on Wednesday before getting hammered. Do we get a better answer to the question today, Saz, whether it's more of a FedEx problem or more of a global economy problem that they're dealing with?
This is just a whole host of problems, Dave. You can pick your poison. I've seen some analysts on the street highlight market share loss to Amazon. Amazon is a company investing aggressively in its logistics operations and might be taking market share from FedEx. It's a UPS thing. UPS under new CEO Carol Tomei is doing well. Now, are they impacted by the slowing economy? Yeah, sure, probably, but not by the same extent probably as a FedEx, because they are being run better than what is happening over at FedEx. Bottom line is this, you had FedEx a couple months ago at Investor Day hype a lot of growth, come out here very aggressively, and I think a lot of the well-paid people inside of that management team forgot that the economy is slowing down, we have high levels of inflation, and it is unlikely that you're going to come out here and hit the high end of your growth targets in this type of environment. Bad job by them. They're in the penalty box. They need a couple good quarters.
And Brian, of course, you mentioned some of the carriers, but you also have companies like Amazon who have their own logistics that they're dealing with, that's also taking market share away. Do you think FedEx has done enough with these cost-cutting measures to really reinstill some of the confidence in the management team?
No, and that's why I'm saying, Rochelle, that it's going to take a couple quarters for FedEx to come out here and regain the investor confidence on Wall Street. You know, I wrote this in the Morning Brief newsletter last week. It could take up to a year for investors to, I think, just get comfortable again with the fact that this is a FedEx executing strongly on the top line, that, oh yeah, they're also delivering on these billions of dollars in cost cuts that they have now dumped on Wall Street. I know Wall Street loves to hear these large numbers. They love to see FedEx coming out here and cutting close to $2.2 to $2.7 billion in costs. It's an absolutely amazing press release. I get it, but now they have to deliver on these things. And what does delivering look like here, Yahoo Finance team? It might mean lower morale inside of FedEx. It might mean as they cut back, as they ground planes, as they shut sorting facilities, it might mean more market share loss to an Amazon, more market share loss to a UPS, and we could very easily be sitting here 6 months from now, and it's another earnings warning from a company like FedEx, and then maybe no more guidance for FedEx for the next 2 years.
Some really tight times ahead. Ahead for Brian Sozzi. He'll sit down with Mark Benioff, co-founder, co-CEO of Salesforce. We'll see you in a bit, Soz. Thank you.